Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Paris Rapeseed. Since the low in mid-March, where we saw the market ending with a hammer pattern, we've seen a V-bottom and overall prices gradually moving high in what initially I thought might be an ascending triangle pattern, but which is now more as an ascending wedge pattern. The lower trend line for both is the same. It is the bright red mid-March today uptrend, currently at 472.5. And for the upper trend line, now I have previously chosen not to draw a new trend line, and still do now, but instead I relied on two previously highlighted features. The first is the gold long moving average, currently at 496.5, and or the dark blue neckline extension, that's currently 494.5, to the April to August 2024 head and shoulders top. From mid to the end of May, and then again last week, we've seen concerted attempts trying to break higher over both of these topside resistances until yesterday, when we had our first real open, high, low and close over both resistances, even if it was with a daily indecisive doji cross pattern. But we have followed through today higher. Though it is only just over, this has been enough for me to lay out some potential topside targets for the ascending wedge trend, and I'm taking a risk on this as it still might be a false break on the upside. Doesn't feel it at the moment, but it might still be. Nevertheless, for now, a primary topside target X would be in the 521 area, with a secondary harder to reach target X1 up at 537. These look ambitious targets, but that is what they look like right now, so watch this space. Winnipeg Canola. Back in mid-May, we started to run into some serious overhead resistances, specifically some resistance I mentioned 7 weeks ago and ever since, and I quote, some generated congestion roughly between 723.70 to 735.20, plus a recent ascending lower trend line extension, end of quote. Now I also added to this 5 weeks ago the neckline extension of the old August to October 2024 reverse head and shoulders continuation pattern, and that's currently at 747.60. And this one has been particularly good at capping the market back in early May and then again this week. Indeed, the only reason I didn't mention it sooner was I thought the 723.70 to 735.20 congestion area would have been enough to stop the market. But I'm grateful for this slightly higher resistance at providing an appropriate cap. So, back in early May we had a gapping changeover lower, leading to what can best be described as a somewhat artificial weekly reversal down. Prices then tried to recover, but the rise in late May was tempered on approach to the overhead 50% Fibonacci line of the July 23 to September 24 move at 700.5, even though prices started to fill in the changeover gap. It seems that early move higher was then too much, and we had a sharp drop in the market, back down to the previous mid-May low in the 664.10 zone, which is coincident with the November 2024 high and the interesting 38.2% Fibonacci line of the same July 23 to September 24 move. That the 50% Fibonacci line above at 700.5 had capped prices for, plus the not insignificant rise in green short medium moving average, currently 689.30. So all these halted the decline at the turn from May into June. Now, as I said here 2 weeks ago at the end of my commentary, and I quote, so what we have growing here as a pattern, I put a question mark on that. Well, I'm not too sure, but it has, if I was to hazard a very really outside idea, then I would look at the recent action as possibly a bearish cat's ears pattern, or less outrageously, maybe a double bottom. More on this should it develop, end of quote. Well, since 2 weeks ago, we have seen a number of interesting things. We have seen at the start of last week the 50% Fibonacci line up at 700.5 try and cap prices, though it did it successfully until Thursday last week. The market's breakthrough higher, halting briefly just ahead of the old July 2008 high at 710.80, saw prices punching higher through the congestion at 723.80 and towards what is now the dark blue highlighted neckline again, and that's currently at 747.60. And it is, as I said last week, and I quote, "Most important of all is that we have now, as I mentioned earlier, a double bottom on our hands here with a primary target X in the 717.70 area, so not too far away, and a secondary harder to reach target X1 up in the 726 even area." End of quote. Both these targets were achieved on Friday last week, and we're now paused just short of the dark blue overhead neckline once again. Beyond this, we have the July 21 low at 761.90 and the old and former all-time high from March 2008 at 770 even. Now, I'm doubtful about the value of these, as having looked earlier, I found that neither had performed that well as support on the way down. It also brings up two possibilities now. Could the mid-March today action, could it be seen as a possible bullish halfway hesitation? Or as a possibly quite large double top pattern? It's too early to choose one of these in the meantime, but another pattern may emerge, so watch this space. Burst of Malaysia crude palm oil. There is one predominant, quite recent pattern here that gives an idea of what is going on here. It is the imperfect bright red ascending triangle pattern formed over May to mid-June, currently 39.26 to 39.79. It is a small pattern, and we had an attempted false break on the downside that failed at changeover. That ultimately led to this week's changing gapping higher pattern. Higher move, over the short medium moving average, currently at 40.09, and up towards a July 23 high at 41.89. Now, last week I gave the following ideas on this ascending triangle pattern, and I quote, "Whilst I cannot give as yet definitive targets for either side, I can give an idea of the potentials involved. Thus, a primary potential of plus 209 ringgits, with a secondary harder to reach potential of plus 298 ringgits, whilst a true confirmed break lower below the bright red lower trend line will have a primary potential of minus 131 ringgits, for secondary harder to reach potential of minus 298 ringgits. End of quote. The top side potentials now translate to a primary target, a topside target X at 41.90, or in other words, the July 23 high, and a secondary harder to achieve target X1 is up at 42.79, or in other words, just around where the combined overhead resistance at 42.74 from the 38.2 Fibonacci line of the May 20 to March 24 move and the 50% Fibonacci line of the May 23 to December 24 move. It is also right now just above the now flatlining medium moving average, so all in all quite some ambitious targets topside. However, just in case beyond these, we have the previously oft mentioned wide congestion area between 44.08 to 45.59 to watch out for. This was support but is now resistance. Okay, so there is one other feature which I would like to discuss, and this came about because I will next week be speaking about it actually at a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. It is a watch out for a key level from now until the end of this year, which I realize is quite a time to keep an eye out for. That level is 35.99. If we push down below 35.99 before the end of this year, then we would have set up the conditions here in palm oil to make that nearest or that rarest of patterns an annual key reversal, with all the implications such a huge long-term pattern may bring. Please watch out for this. It is important, and I will bring you more details should we get down below there. Though I of course, realize that today, towards the end of June, as opposed to what happened in, well, the month of May, we are further away from this key level.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.